Good morning, Dr. Oshodi. Thank you for joining us. But it seems you are not. We can't see you clearly. But thank you for joining us.
Really?
So we would welcome the Managing Director and CEO of STL Trustees to give us the opening remark. Good morning, Ma.
Thank you very much. Thank you very much. I'd like to welcome everyone. Good morning, good day, depending on where you're joining us from. So I welcome you very warmly to the STL Asset Management webinar that has the theme Demystifying Faith-Based Investing. My name is Fumi Ekundayo. I am the Managing Director, CEO of STL Trustees Limited, and a non-executive director of STL Asset Management Limited. I am extremely thrilled to extend this warm greeting to each and every one of us today. Thank you for joining us. As usual, we're going to ensure that we keep to our 1 hour, 30 minutes for this webinar so that we'll be fully engaged, and we would also release you to go and attend to other things that you have to do for the day. Today marks a very significant moment as we explore the world of faith-based investing, where financial strategies meet ethical considerations. In an age where responsible investing is gaining importance, understanding faith-based approaches have become very, very crucial. Throughout our session today, we aim to encourage insightful discussions and also provide a forum and a platform for knowledge sharing. Information, they say, is power. I therefore invite you to actively participate, engage with our esteemed panelists, and also share your thoughts through the Q&A session, and also you can drop your chats as we move along with the webinar. Together, we'll pave the way for financial strategies that align with our values. Once again, I thank you for joining us. I'd like to quickly recognize our repeat participants. Thank you very much for always joining us for our webinar series. This is the 9th in the series thus far, and I already see some very familiar names and counterparties. We acknowledge you. We appreciate you for joining us again today. For our new participants, we also welcome you to the world of STL webinar series. And I'm sure that with the engagement today, you'll be happy to join us again for our future webinars. So thank you very much. I've exhausted the time allotted to me. Moderator, over to you. Thank you.
Thank you very much, Ma. And like you mentioned, thank you for all our repeat participants. So before we comment on, it's going to be a panel discussion. We have panelists, 3 panelists with us today. We have 2 doctors in the house. So please, I would appreciate you cook up your questions and put them in the Q&A chat box. When we get to the point where we open the questions to the audiences and the attendees, we would pick your questions accordingly. So to the house rules, there will be no discussions. It will just be myself, the moderator, and the panelists during this session. And after 1 hour, 10 minutes thereabout, we would open the questions and look at the questions in the Q&A chat box, and we would ask the questions to the panelists, your questions to the panelists. My MD has mentioned, I like to call her MD. As my MD has mentioned, we will try as much as possible to stick to our time. However, we've given ourselves room for 10 to 15 minutes beyond 12:30, such that in case we have an overrun. So to move on to the next session, which is introducing the panelists. Like I'd mentioned, we have 3 panelists in the house. Just to introduce, we have Mr. Ismail Rufai Olayinka with us. He's currently the head of financial and Sharia advisory at 117 Capital Limited. Mr. Olayinka is a certified Sharia advisor. He heads a team at 117 Capital and specializes in Islamic finance. Mr. Olayinka actively contributes to non-interest financial institutions of Nigeria, blending expertise with advocacy in Islamic finance. Welcome, Mr. Olayinka. Thank you for being with us today.
It's my pleasure. Good morning.
Thank you very much. So we're going to go to the next panelist, who is our first doctor, Dr. Bashir Oshodi. He has over 23 years of experience in banking, real estate, and academia. And he leads the Trust Author Group and a UK Sharia-compliant real estate fund. He is also a member of key financial committees with expertise in Islamic banking, risk and compliance, and it has influences far and wide. As we speak, as at yesterday and day before yesterday, Dr. Bashir Oshodi was also at a conference where he was an active participant. Welcome, Dr. Bashir Oshodi.
Thank you. Thanks for inviting me.
Thank you very much, sir. And to our second doctor, like I said, we have two doctors in the house. We have Dr. Akim Oyewale with us. He's the Chief Executive Officer of Mabu Capital Limited. He's a seasoned professional with a diverse educational background, has over 20 decades of experience in investment banking, credit marketing, and sustainable finance. Like I had mentioned earlier, is the CEO of Mabu Capital and a member of various prestigious financial institutions. Welcome, Dr. Akim Oyewale.
Thank you very much, Hamid. Thank you for having me.
Thank you. Thank you very much. So thank you for being here. Like I'd mentioned, it's going to be a panel session, a panel discussion. I have some few questions that I would like to discuss with you on, so that we can share some light on faith-based investing. For me, it's been a very interesting one in my little experience I'll call it little experience in asset management and investing and managing people's money. I've seen experience a lot of investors and clients that have some specific desires as regards aligning their investment objectives with their faith values, with their personal and faith values. And it was quite interesting that I had a colleague and she mentioned that how come we don't have how come faith-based investing is more tailored towards Sharia compliant investing, and is Sharia compliant investing only for Muslims? So for me, that was what brought up this idea to say, let's have a webinar to sort of discuss on it. So my first question would go to Mr. Olayinka. What is the concept to you? What is the concept of faith-based investing, and how does it differ from ethical or responsible investing?
Okay. Good morning once again, and for the question, basically when we talk about faith-based investing, technically we are looking at investing that align with faith. And when we mention faith, meaning apart from the monetary reward that you'll be getting for such kind of investment, you are also taking in sin, or what you do is benefit, so you put in the world and the after faith. And we have about three major religions in the world, which are all Abrahamic in nature: Judaism, Christianity, and Islam. In all, they all condemn usury, which is the basic underlying prohibition of some of the faith investments that we have. So when we look at this investment, is mostly about Islamic finance. I think is a wrong notion. Rather, all Abrahamic religion, all condemn usury, which is the basic foundation. But we have other layers of condemnation or prohibition that have been based on each religion doctrine. In Islam, for instance, you may not farm piggery, but other religion accept piggery as a form of actually do business in alcohol, but probably in moderation. So basically, it's just based on people's belief, and this belief to make explanation that now aligns with your faith. So ethical, on the other hand, yes, I'm investing in usually form of asset. Maybe you invest in a bank, but a bank may not be termed ethical.
Mr. Olayinka, okay, I think we have lost him. Okay, Dr. Bashir, to you, how is faith-based investing different from ethical investing? Would you say they are the same or they are different?
Okay, thank you very much. Can you hear me clearly? So
yes, loud and clear.
Just to reflect further on the first answer. I want to extend faith-based finance into even the works of Aristotle. You're supposed to call him a theologist, right? Which also covers elements of ethical behavior and ethical financing, right? On the backdrop of unique ideologies, right? They may be divine, you don't know, right? In the same vein, I also want to extend to the works of Buddha, in what we call Buddhism today, also based on ethical propositions, promoting welfare of man, right? And good communal living, right? Again, is on the back of that. You then have the Christian economic model that's helped the development of Western Europe, that's expanded industrialization so much, right? Then you can then jump into Judaism, also with its elements of what they call tadaka, which is giving, right? Yes, then now landing with Islamic finance. Now, to answer your question specifically, so faith-based can be wide. I've only covered 5 aspects very briefly, right? So going to your question now, you're asking for the reception of faith-based, right, in Nigeria. That is, have we accepted?
Sorry, the question is, what's the difference between faith-based investing and ethical investing? Is there a difference or they're similar?
Thanks. So again, based on the 5 religions I talked about, if you like, people have then defined ethical investment within the realm of anything that does not hurt fellow human beings, protection of the environment or preservation of the environment, right? Anything that avoids child labor, having children to work in the farm or in the mines, right? Or illegal mining or illegal agriculture, as the case may be, that will then lead to some kind of produce or product, right? Anything that avoids that, right, is ethical. Yes, some other scholars have included tobacco, right, in some instances, that anything tobacco can also be seen as unethical. Now, Islamic finance is specifically Sharia-compliant transactions. So you can be selling water, and that process of selling water may not be compliant, right? Water is compliant, everybody drinks water, right? You can be selling houses or be selling agricultural produce, but the process, so product, process, governance are the key elements that makes a product Sharia compliant or not Sharia compliant. Thanks. I just stop there.
Thank you. Thank you very much. I was about writing down the 3 things you said: products, process, and governance.
Correct.
Those are the key things that you need to look at when you are focusing on faith-based investing. Okay. Correct. My next question, Mr. Olayinka, I can see you are back. Apologies. Your network was having a bit of wasn't stable, so we had to move along. So the next question, I'll take this to Dr. Oyewale. What has been the reception of faith-based investing in Nigeria? My understanding is you are the managing director of of a faith-based compliant asset management firm? And based on your experience, how has the reception of faith-based investing been in Nigeria?
Thank you so much. Thanks again to the STL group for inviting me for this session. Yeah, so the reception has been a bit mixed. I must say that, especially at the beginning. We have, and we should commend some of those 4BS that actually did the heavy liftings at the tough times in the beginning, the likes of Lotus Capital, Abib Bank, Jaiz Bank. So at the beginning, especially because of the fact that Nigeria is highly polarized across religious lines, you tend to have anybody that's talking about faith-based investment to be looked at from a very, very a perspective that may not necessarily be economic at times. The more I would say the more common faith-based investment that you've seen so far have been Sharia compliant investments. And like Dr. Bashir said, you actually have faith-based directives for investment across most of the leading religions. However, in Nigeria, when we started, or when faith-based investment started gaining roots, there was a lot of resistance. I mean, there are a lot of views that perhaps Nigeria was moving towards being a particularly secular or a particularly focused state that will be supporting a particular religion against a particular religion. So the reception was quite mixed. It wasn't very, very exciting and welcoming. However, with time, I think the people have tend to realize that faith-based investments is just what it is. It's just another aspect of investment, just another aspect of finance, and people have reason to the fact that, okay, so if this is not really about religion, it's about supporting what is right, supporting ethics, then let us go along with it. And so far, and I think since that awareness, has become more and more entrenched, we've seen regulators, the central bank, issuing instructions for non-interest banking. We've seen SEC issuing instructions and guidelines for sukuk issuances and Islamic finance. We've seen PENCOM even issuing guidelines as well, starting up Fund 6 that allows people to be able to do non-interest pension contributions and investments and the like. So I would say at the beginning, it wasn't so smooth, but now people understand that investing in faith-based instruments, especially Islamic finance instruments, is not necessarily for Muslims alone. It's for everybody. And with what the government has done with the issuance of sukuk, over the last couple of years, we've actually been able to see a lot more acceptance because the sukuk, like Dr. Bash said, the governance around Islamic finance is very, very strong. And it's one of those entities or one of those instruments that minimizes corruption in the land. So we've seen the advent of sukuk for infrastructure development being used properly in Nigeria as against what we had previously. That has gone a long way to demystify the misconceptions about faith-based investment or faith-based finance activities. So right now, I would say right now, everybody understand what it is. There are investments that are halal. A lot of asset management firms, even conventional ones, they've launched a couple of halal funds. There are some focused fund management companies like ourselves, like Trust Author, that all we do is halal investment, but it's getting more and more a mainstream. Thank you.
Thank you very much. Very, very robust response. And I know from what I gather from you, it was quite difficult at the beginning, but as we are now, it seems the reception has significantly improved, and people are beginning to understand that there was no underlying intent to promote Islamic Sharia compliant investing and Islamic finance in Nigeria. Okay, moving on to the next question. Mr. Olayinka, are you with us now? Fully, I'm back.
Yes, I am.
Oh, thank you very much. So my next question to you would be, what are the potential benefits? So I think let's start with the benefits. What have been the benefits of faith-based investing? Before we look at the drawbacks, what have been the benefits of faith-based investing?
So I will start it from the angle of financial inclusion. So we have a population of millions of people who believe in investing in Sharia compliant instruments. But in the absence of these particular instruments, be it in the banking or in the capital market, a lot of them might be taken out of the capital market ecosystem, meaning they have this capital, but the willingness to invest is not there. So a very key positive of Sharia investing in Nigeria is just the financial inclusion, that a lot of people are now be brought into the financial sector from the informal sector instead of keeping their money idle. And it has also helped in increasing the capital base or the investing amount we have in the sector in large. For instance, when we look at the FGN, the numbers of retail investors in 2017 when it started compared to when it is now in the last issuances has increased a lot tremendously. Pension industry, whereby you now have a pension account. These are also positive. So what we can hear me?
We can hear you, but we're losing. Oh, please go ahead. Go ahead. Go ahead.
Okay. So my network is unstable, so I'll need to off my video. Probably you may just need to bear with me.
It's fine. It's fine, sir. It's fine, sir. You can go ahead. Are you with
so the major one I can mention is the financial inclusion part. So number two is increasing the number of Islamic finance related institutions within the Nigerian market. So with the growth of Jaiz Bank today, we have like 4 banks that are fully registered as Sharia compliant on non-interest bank in Nigeria. We have the like from Lotus Capital today, we have the likes of 117, Marble, and Trust. So we have it both on the demand side and the supply side. The demand side being the operators and the supply side being the investors. So there have been positive growth in terms of the acceptance of these concepts in the Nigerian market. Thank you very much.
Thank you. Thank you very much. From what I gather from you, in terms of potential benefits of faith-based investing, the growth of faith-based investing in Nigeria has been 1, investment inclusion. 2, it has also grown the capital base, giving a very instance to how the Sukuk offerings by the federal government have been oversubscribed. And also, it has also grown market participation, especially in the Islamic finance and finance space. So, Dr. Oshodi, are there any drawbacks? Do you see, have there been any drawbacks based on your experience? Have there been any drawbacks to faith-based investing?
Okay, thanks. So I think that if you look at 2009, 2010, 2011, everyone was scared of it. They thought there's going to be a force that will consume everybody. So everyone was scared. A lot of people were scared. A lot of people were just not bothered, right? So yeah, so the drawback then was reputational risk. Reputational risk for those practicing it. Reputational risk within the organization, and even, if you like, it metamorphosed to some extent into some kind of country risk because of perception, right? Perception, of course, a function of belief, interest, and all of that. So the kind of perception that I had then created, should I say, some kind of hurdles, in the market. People were not sure whether it's a good thing. And so if I'm going to practical examples, right? One of the places where I worked, for example, there was so much fear around reputational risk that some clients decided to withdraw decide to move their account to other banks, right? They thought, hey, if this bank is going to do what was then called Sharia banking, we're not going to bank with the bank anymore. We're just going to stop, you know? So that's a perception, right? Again, function of belief and interest, right? Largely, right? Way back into 2000 and say 14, 15, 16, you still had this fear in the market, 17, until to a very large extent, when we had the first to cook, federal governments to cook. Yeah, I mean, the first race to cook was Osun to cook was in 2013, right? But with the federal governments to cook, the fear just disappeared, right? That reputational risk just disappeared. And more importantly, because should I call it rebranding? So for a very long time, we stopped calling it Sharia banking, and then we avoided calling it Islamic banking. We moved to non-interest finance, which then became a lot more acceptable in our own kind of markets, right? That eliminated the fear to a very large extent, right? And as much as possible, again, practically, if I'm going to give a Wakala contract to a client, I want to use Wakala in just one place in that contract. I want to then put agency in a lot of places. So yeah, the person sees Wakala, he understands it, maybe in brackets. So that way, the market started to absorb it further. Let me get an example of the UK, Standard Bank of Britain in those days, now Ryan Bank. When they started with lovely Islamic calligraphy in their flyers and their websites. With these calligraphies, lovely calligraphies, they write wow in nice ways and all of that, but people ran away from it. The bank almost went down because there was no patronage. But at some point, they stopped, they changed that style, so that it can be acceptable by everyone to take out the fear. There was a facility building we did many years ago, right? I remember I was in Kaduna, Kano, and even Abuja then, and they would make T-shirts, and they would put some kind of calligraphy on it, and people said, no, we're not going to wear it. They're not going to wear the T-shirt because even though it's Arabic letters, so we stopped all of those things and made it more liberal, more acceptable to take out that reputational risk. And don't forget that reputational is one of the biggest risks in banking. Reputational risk, it can spoil the entire product, right? And that's what we have to eliminate, till today. And so, rather than Sharia Advisory Council, the first guideline that was released in, I think, 2011 or so, January, February, thereabout, first quarter of 2011, thereabout. The guidelines, apart from the draft guidelines of 2009, it had Sharia Advisory Council and all of those things. Rules of Sharia was in it. The one that was released, I think, middle of 2012, thereabout, eliminated Sharia completely. By that singular act, people just started liking it. Yes, okay, it's an advisory council of experts, rather than, Sharia Advisory Council or Sharia Advisory Committee. Even though that's what it's used all over most part of the world, right? But Nigeria is an exceptional situation. So we had to rebrand, right? And as such, patronage became a lot better. Fear around the product got eliminated. Reputational risk reduced drastically. I'll say it's not eliminated yet, but we're getting there gradually. Yeah.
Thank you very much, Dr. Bashir. So what I see here is perception.
Right.
Perception is very key to how the faith-based investing world is going to grow, which very much is very key. And that's, for me, for us at STL, that's one of the reasons why we are having this webinar in the first place, to sort of let people get comfortable with the fact that faith-based investing is not just for some exclusive set of individuals. It's actually for everybody. Okay, so we've come to the end of the first session, and we'll be putting up our poll to the attendees now. Please, can we have the first poll up? Thank you very much. Attendees, please, can you kindly participate in our first poll? How much does faith influence your investment choices? A little, a lot, not at all. Thank you very much. We have 106 participants. and currently 42 people attendees have responded. Now we have 50, we have 53, we have 58, we have 60, 61. Thank you very much for participating in our poll. We would want more attendees to respond. Thank you. Thank you, thank you. Thank you. If you haven't participated, kindly participate. Okay, thank you very much. We have 68 participants for the poll, and 78 of these participants have responded to say that faith influences their investment choices a lot, while 17 have said a little, and we have 4%. 3 people out of the 69 participants have said it does not influence at all. Thank you very much. So it means that for the attendees, their faith is very, very important in their investment choices. Thank you very much. We're going to take a 5-minute interlude and we would commence the next session. Thank you very much.
Hi, I'm Ahmed Olajuwon, the Managing Director of STL Asset Management Limited. I'm excited to introduce you to who we are and what we do. At STL Asset Management, our mission is to help you achieve your financial goals. We are not just a fund management company, we are your dedicated partner on your financial journey. With over 30 years of excellent service delivery by STL, we have solidified our reputation as a trusted name in the Nigerian capital market. Also, we have the license to carry out the fund management services in Nigeria by the Securities and Exchange Commission. Our success is driven by a team of investment experts, each deeply committed to delivering exceptional investment solutions. We understand that your financial goals are unique, and our mission is to make them a reality. What we do is simple yet profound as we empower you to make informed investment decisions. Whether you are looking to grow your wealth or achieve a financial target, we are here to provide you with the expert guidance you need. Our approach is collaborative. We work closely with you to understand your goals, risk tolerance, and investment circumstances. Then we tailor our strategies to align with your needs, ensuring that your financial future is in capable hands. We are eager to start working with you on your financial goals. To get in touch with us, simply visit our website at www.stlassetmgt.com or reach out to us via our email address, wealth@stlassetmgt.com. Thank you for considering STL Asset Management Limited as your trusted partner in achieving your investment objectives. We look forward to embarking on your financial journey with you.
Thank you very much, my sponsors. That was a very short advertisement by the sponsors of this webinar. Thank you very much. Thank you very much, STL Asset Management, for having us here. So we're going to jump to the next session of the webinar, and we'll sort of drill down to Sharia compliant investing. And the reason for me is I've heard Dr. Oshodi, I've heard Dr. Oyewale, I've heard Mr. Olayinka mention the same thing, which is the predominant faith-based investing methodology in Nigeria now is the Sharia compliant investing. So let's do a bit of deep dive into that. So my question goes to Dr. Oyewale. My first question goes to Dr. Oyewale. Is Sharia compliant investing only for Muslims? Apologies, it's a bit an emotional question, but I'll throw it at you. You're the doctor. Let's hear you out. And based on your experience, is it only for Muslims? So when you speak to your potential client, okay.
So the answer is no. Okay. The answer is capital no. Okay. Now I will just expound on that a bit. You know, Sharia compliant investment is not for Muslims alone. It's for anybody that is desirous of an ethical investment plan. Okay, your objective is to ensure that you invest properly in something that aligns with your own convictions. Now, Sharia compliant investment, the difference between that and other forms of ethical investment is that it aligns strictly with Sharia laws and Sharia guidelines. Okay, so that's a major difference. Now, if you look at the world of ethical investment, I mean, Sharia compliant investment is like 75–80% of that. You know, whatever is Sharia compliant definitely is ethical. Okay, and like Bash said earlier, there are some transactions that are ethical, but they are not Sharia compliant. I will take that again. Okay, whatever Sharia investment you are able to make that has been certified as compliant, you know, it is ethical. You can go to bed that you have made an ethical investment, but not all ethical investments are Sharia compliant. Now, because we have a preponderance of Sharia compliant instruments in Nigeria, it goes without saying that anybody that's desirous of saving the world, of doing something good for your neighbor, for yourself, for the community, and you want to do it through your investments, by making a Sharia compliant investment, you are not going wrong. It's already ethical, and you can take that to the bank. Now, if you want to still speak more to what ethical or Sharia compliant investment, what it does for you, just like I will use the precepts laid by Bash, you know, where he talked about the product, the process, and the governance. The governance around any Sharia compliant investment is very, very strong. Okay, apart from if it's an asset management product, apart from the asset management team working very well on it to ensure it complies with all SEC regulations, it meets the needs of the investor, it gives you proper returns, they've done an evaluation of the strength of that particular investment. You now have another layer of Sharia experts. We call them advisory council of experts. These are people that are scholars. These are people that are, some of them are lawyers, some of them are professors, some of them, but the major thing they do is that they have knowledge of Islam and Sharia. So apart from reviewing your transactions from a technical perspective, they will subject it to Sharia considerations, to Islamic law, you know, and see whether it complies with it. You know, Islamic law, just like we say, I mean, the major goals in any Islamic endeavor are 5. We call it Maqasid Sharia, you know, and it essentially tries to ensure that we enhance the quality of living, we protect life, protect wealth, you know, protect lineage, protect faith, you know. So all of those are brought into consideration whenever any advisory council of experts is reviewing any investment instrument before they put that stamp of Sharia compliance on it. Now, so if you are able to get that stamp, it goes without saying that you are investing in an ethical instrument. And I think that is what a lot of people are trying to do, especially in the world today. We are talking about SDG. We want to save the world. We want to protect the planet. We want to protect the environment. You know, we want to eliminate the use of hazardous substances, fossil fuel, and the like. We want to protect the environment for the generations coming ahead of us, you know, coming after us. You know, so we have to ensure that on a continuous basis, we promote and we invest in Sharia compliant instruments, because by so doing, we are doing the world a lot of favor. Thank you.
I'm smiling. You know why I'm smiling? You've given me a quote. All Sharia investments are ethical, but not all ethical investments are Sharia compliant. I have to put that on my wall. Thank you very much. Thank you very much. So in a nutshell, if you're an investor and you are very ethically focused, then one investment outlet you should think about are Sharia compliant investments. That means it's not just for Muslims, it's for everybody. Thank you very much, Dr. Oyewale, for that. I really like that. When I frame that quote, I'll send a picture to you. I'll certainly send a picture to you. So, Mr. Olayinka, I have this question for you. So we've all said this continually, continuously, which is sukuk. The first sukuk was done by Osun State, and the federal government has been doing sukuk continuously. Even this year, they've done a sukuk this year that has been oversubscribed. And for the best of my knowledge, all the FGN Sukuks have been oversubscribed. Would you say that given this oversubscription, the acceptance of Sharia compliant investing has significantly grown in Nigeria?
Yes, compared to where the concept of Islamic finance was introduced to the Nigerian market, I would say as it is today, the growth has been tremendous, and it has been positive. When you look at it sector by sector, industry by industry, let's take the capital market. Today, you have a lot of companies, be it Sharia-related institutions or conventional finance company, are all offering one or two products that are Sharia compliant. In the insurance industry, you have the Takafi companies. In the banking, you also have banks that offer non-interest products. Then if you now also go to the pension industry, you also have the pension introducing the Fund 6. So this shows that in each of the financial sectors, every player is thinking of providing one or two services that will be able to solve a Sharia-related problem. But for the Sukuk, if you are to look at it in particular, the advantage of the Sharia compliant investment is that both the ethical investors and the conventional investors can invest in Sharia compliant instruments. So irrespective of whether it's a conventional bank or a conventional insurance company, they are all open to invest in Sharia compliant instruments. And this now enable the investors or eligible investors in any Sharia compliant investment that has been structured to be more of optimum compared to the conventional, because here you have a full option or a full advantage of you having all possible investors investing in such kind of structure. And again, because of the fact that Islamic finance also aligns with some of the problems we have economically. In Nigeria, for instance, our major problem is infrastructure. And for the Sukuk, people can easily see where their money is going to. And when you travel by the roadside, you see Sukuk funded section. And it gives any investors that kind entitlement that my money has been invested in this project. And next time, probably when you see an offer that opens in terms of Sukuk, you want to subscribe. And this is one of the reasons why the retail base for the FGN Sukuk in the last one has been over 20%. So meaning out of the money that was raised, we have retail investors contributing over 20% of the fund, which is a good one for the economy. It shows a lot of capital will be coming from the investment side, and you also have returns coming. So the advantage basically is just that when you structure a product that is Sharia compliant, you have the advantage of having both the conventional and the ethical investors investing in it. And because of the asset-based, asset-backed nature of the industry, people can easily see what their money is being used for. It's also part of the encouragement that also increase the awareness and the financial inclusion that we're talking about.
Thank you very much, Mr. Olayinka. I like, you said something now which relates to what Dr. Oshodi had mentioned earlier, which is perception. So the fact that the federal government issues sukuks and use those sukuks to develop our roads, and they put a signboard there to say, this is a sukuk funded road, sort of increases the awareness, which also helps with the perception that investors have about the federal government sukuk. So probably increasing the subscription and the subscription that we have towards those federal government sukuks. Dr. Oshodi, can I ask you a question? How come we haven't seen corporate entities issuing sukuks? Is there any, based on your experience, that question just popped in my head to say we've seen a state, we've seen the federal government consistently, but we've actually not seen a corporate, apart from even the family homes is more of a federal government supported entity. So how come we've not seen corporates tapping into this space?
Okay, thanks. I think there are loads of them, really. There are quite a number of them. They may not be as large as that of the federal government. Federal government will do 100 billion, 150, 250 like that, but most of the sukuk we have around 5 billion, 10 billion. Quite a number of private one. I'm aware that Marble Capital was involved in the Green Sukuk a while ago. There are a couple of about 4 real estate sukuk, private ones I've seen, right, in the market. And there are a few more coming up, right? So there are, again, I can argue that you may not have as much yet, right? But we believe that as knowledge gets expanded, right, and the acceptance increases, and of course, with the consciousness of the fact that investors want secured investment, to ensure there's guarantee and everything in place. And we envisage that a lot more will be in the market. I think from next year, because I'm aware of about 5, that I know of personally, that the pipeline already. They're all private sukuk. Of course, don't forget one of the non-interest banks also issued a sukuk. Taj Bank issued a sukuk.
Yes,
I think, yeah, Taj Bank, yeah. Right. So you have private sukuk coming up. It's the size of the sukuk market in Nigeria. When you take out federal government, which is almost 900 billion, then you have another less than 100 billion private, thereabouts. So the sukuk market is barely $1 trillion at this time, right? Next year we envisage, really, just like I mentioned, that the private one is going to increase. Maybe not catch up with the federal government one, but it's going to increase drastically. So we have them, and we're going to have a lot more. In fact, we're going to be having diversified private sukuk shortly, right? So the very common ones are the of course, the federal government, which is basically for the Jara, even the Osun State one, for the Jara. We're going to be seeing sukuk in the area of Moraba. You're going to be seeing Wakala sukuk. You're going to be seeing even some kind of, these are the 2 main ones that I think will be very prominent in the market now. Of course, apart from the regular for the Jara, which is very common. So you'll be seeing diversified contracts within the next few months.
Okay, thank you very much, Dr. Oshodi. That means for asset management firms and investors, we should be looking forward to next year for such opportunities if we want to tap into Sharia compliant investing space. Okay, my next question is to Dr. Oyewale. Dr. Oyewale, it seems like I'm putting you so much on the spot. I've been asking you too many technical questions, but don't worry. I have some technical questions for Dr. Oshodi too, very soon, very, very soon. So, Dr. Oyewale, so there's been this consistent feedback we get from investors, especially investors that are Sharia compliant focused and this relates to the death of investment offerings within that space. We've consistently spoken about sukuk, and I'll give an instance. I met a potential investor a week ago, and the question he asked me was, apart from sukuk, what can you do? So, and I've consistently gotten this question. So I know if you get my money, you're going to go and invest in a sukuk. I can invest in sukuk myself. So are there other investment opportunities within this space beyond sukuk?
Thank you very much. I think it's going to be helpful if we define what a sukuk is. Okay. So a sukuk essentially is a certificate signifying ownership of an asset. Okay, that's it in a very short form. I mean, the sukuk is the plural form of sak. Sak is the singular form. So you get sukuk often and often because it's multiple saks. That is S-A-K-K, that is now called sukuk. Sukuk is a plural form of like raising a fixed income instrument or a fixed income bond. That's the way the conventional folks look at it. So when you mention sukuk, you're actually talking about multiple or different types of debt raising structures. Okay, just like Bash was saying earlier, there are multiple structures. So the most popular one is the FGN transaction, the FGN Sukuk. You know, that is usually an Ijara-based structure. We have Sukuk that are based on other types of contracts. You know, you have Mudaraba, you have Musharaka, you know, you have Salam, you know, all these are technical terms anyway. But what it means essentially is that there are different types of fundraising mechanisms, you know, depending on the type of transaction you are trying to do. However, all of them, at the end of the day, you call them a Sukuk, but they are not just the regular one that you see. Now, over and above a debt instrument or an asset-based instrument that's long-term that you call a sukuk, we have multiple asset types as well that are also come under the Islamic finance window. So you have equities. Okay, you have Islamic equities, you know, Islamic stocks that have been screened by the ACE, that have been certified as being Sharia compliant. You can invest in them. You actually have an index on the NGX today that has only Sharia compliant stocks in them, the Lotus Halal Index. You know, so that is also an investment instrument that the investors could participate in. Then you have real estate investment trusts. Okay, one of the largest REITs in Nigeria, the Chapel Hill REIT, the Nigerian REIT of Chapel Hill, you know, is actually a Sharia compliant instrument. Okay, so if you don't want to invest in sukuk, you don't want to invest in Islamic bonds, you don't want to invest in equities, you can invest in a REIT, which is a real estate investment trust. And you have a couple of private ones as well. You also have non-interest commercial paper, you know, which is also available for you to invest in. I mean, luckily for the market as well, FMDQ just released the rules and regulations for non-interest commercial paper, you know, on their board, you know, about 3-4 weeks ago. And that's, like Bash was saying, there's a couple of companies already looking at tapping that CP market, you know, on the FMDQ board, you know, that is Sharia compliant, you know, and you'll be hearing about a few. I mean, you actually still have structures like the FX Murabaha or asset-backed commercial paper, you know, which has raised countless significant amounts in the market today. So you have that, you have the commercial paper, you have the commodity funds as well, you know, that are also halal-based, you know, like the Marble Halal Commodity Fund is a Sharia compliant instrument as well. So you actually have a plethora of investment banking instruments, asset management instruments, investment outlets that are Sharia compliant. It would be remiss of me not to mention that the size compared with the size of the market is still a growing size. I mean, Bash mentioned the total size of sukuk issued in the industry maybe is around ₦1 trillion today, of which a bulk of it is FGN, you know, compared to a market that is multiples of that. So maybe we're still growing, you know, but we're growing at a relatively fast pace. You know, we have corporates that are trying to raise funds, and they're trying to raise funds through the Islamic funding mechanisms, you know, as well. So this is increasing on a regular basis, and it's not just sukuk. You have equities, you have commercial paper, you have real estate, you know, so you have all the necessary, you have indexes as well that are also halal compliant. Maybe we need to do a bit more work to bring this to the awareness of people. There's also the challenge, which Bash mentioned in passing, that most of these issuances are privately issued notes, you know, so that may be one of the reasons why you are not getting so much noise, so much awareness about them. Thanks.
Then sorry, moderator, if I may come in again,
please go ahead.
There's something we're envisaging in the market. I mean, the size of the conventional banking space or assets is over, you know, 70 trillion thereabouts. Now we're going to be envisaging a case whereby people that have taken regular debts at 20-something%, you know, even 30-something sometimes, would then want to sukuk their assets, right? They want to enjoy cheaper funds by saying, hey, this is my assets, is 300 billion, it's performing, right? Can I create sukuk elements around it? It can also be in tranches. Now you can have an asset of 300 billion and say, I want to sukuk 100 billion in tranches of, I don't know, 35 billion or something, right? Now that system has been perfected in other jurisdictions, right? Whereby you have debts, conventional debts, and Sharia compliant instruments side by side. right? Either you are using the Sharia one to take part of the debt, or you are converting the entire debt into a Sharia compliant portfolio. Now, just imagine where we're able to capture 5% of the existing debt markets, right? The interest-based one, and say, let's convert some of it and make them Sharia compliant. The performing ones, of course. Just imagine the quick growth of private issuances. Let me just stop there. Yeah.
So if you don't mind, I will just conclude by saying, so when people talk about sukuk, it's still fine, but it doesn't mean that there's only one investment type that they are having access to. Maybe sukuk is just the most popular term that Nigerians know. But when you speak to experts, we'll be able to tell you that, okay, yes, it's not just the regular sukuk. I mean, you have perpetual sukuk, you have the Modaraba sukuk that Taj Bank raised, you have Salam that Sundry Foods raised and the like, but they are meeting different investment needs. If you're in the agri space, there's a particular structure that will work for you. If you are in the financial space, there's a particular structure that will work for you. If you are a short-term investor, you only want to invest for 90 days, for 180 days, for 270 days, the Islamic commercial paper will just do you fine. So these are available. We need to create more awareness. I agree on that. But I mean, investors should be rest assured that the portfolio is growing, and anybody that desires investment outlets will really have enough. We need to just ensure that more and more are public, but that's an area that people also want to see, that you are issuing transactions that have the stamp of the SEC, and they are not just private instruments, because the risk of performance tends to increase when it is regulated as against when it is not regulated. The chances of performance of the instrument tends to increase when you have a regulator at your beck and call, as against one that is just private arrangements amongst investors and users. Thank you.
Okay, moderator,
thank you very much.
Allow me to add again.
So I'm loving this. Please go ahead. Go ahead.
So you can actually have a private sukuk or a public sukuk or whatever kind of sukuk, and then from that sukuk you create a note, a sukuk backed note around it. So there's a sukuk of ₦1 billion. You buy the sukuk and then create a smaller instrument, a note, a sukuk note around. You can also create a commercial paper from a performing sukuk, right? Again, don't forget, sukuk may also not perform, but let's assume all of them are performing. You can take it and create a CP out of it, so you can enjoy that, that smaller or faster return, just to confirm what Dr. Ewole just said, right? So these are other things you can create from existing assets. I thought it's good I mentioned that.
Thank you very much, Dr. Ewole. Thank you very much, Dr. Shudi. I'm not, it's quite interesting that I've learned a lot in a very short while. I think I'm the one learning. I'm also learning. Even though I'm an expert, I'm also learning. And I like what you've said, Dr. Ewole. In the real sense, the general is like when you say gala. Gala is what everybody knows, but there are a lot of galas in the market. Yeah, there are different sausages in the market. Just the same way everybody knows that general term of sukuk, but there are different types of sukuks. But beyond the sukuk space, we have equity, Sharia compliant equity investing. We have real estate investing. You can focus on REITs, real estate investment trusts. You can also look at non-interest commercial papers, and thank God for what FMDQ has done. FMDQ has done and is doing. We also can look at the commodity space thanks to effects, and we also have commodity-focused halal mutual funds by Marble Capital. Then Dr. Oshodi just nailed everything to say, see, beyond this, we can also create structured products. We can structure things out of existing sukuks. Like the one you just said, you can have a performing sukuk and you can create a commercial paper out of it. If you want to understand more about this, you can sort of ask your questions, and I'm sure during the Q&A session with the audience, with the attendees, probably Dr. Shodi can put more light to that. But for me, I understand what he's saying, but like I said, I'm an expert, but I'm also learning. So my next question is to you, Dr. Shodi. Let's focus on equities. let's make it simple. I'm sure a lot of our attendees like simplicity. I like simplicity. So, aside from debt, fixed income, we have equities. Even though Dr. Iwali has, broadened our mind, let's focus on equities. So let's imagine that I'm not a passive investor. I don't want to replicate the Lotus Halal Sharia compliant index, equity index on the equity market. Let's imagine that I want to invest in equities directly, and I want those equities to be Sharia compliant. What are the things I need to watch out for? What are the things I need to look out for in order for me to say that this is actually Sharia compliant?
Okay, thanks. So there are two major ways to screen. There could be three. The first one is to take out what is not Sharia compliant. You take out alcohol, tobacco, ammunition, and all of that. And the second level is financial spirit, which I'm going to explain. And the last one is, some analysts, can argue that, hey, where there are management issues or where there are certain conflicts in the organization, there can also be a form of screening. So the first one, you take away conventional financial institutions outrightly, right? The banks, the insurance company. Banks, because they deal in interest. Interest is money earned and received on money itself as a condition for the loan, right? That's interest. You take out insurance because they're involved in gambling. Gambling is when you give out something, you win something, you lose everything. You can win or lose everything, right? We're involved in, extreme risk, uncertainty, right? Extreme uncertainty to a very large extent. And because conventional insurance companies are involved in those two, then it means you take them out, right? You take out, of course, tobacco, you take out alcohol, you take out pornography, you take out ammunition. Ammunition, because if you don't take it out, it can be used to, it doesn't promote welfare, right? And that's why it's not compliant, right? It's not as if countries don't like to have ammunition, so that when somebody's fighting, you fight back, But because, banking funds or financial services funds shouldn't be used for such, right? So you take out those ones, right? And again, or any other product that the advisory committee of experts defined as non-compliant. So if the advisors say, hey, this bottle of water I'm holding is not compliant, for whatever reason, then it is not compliant. If they tell you that this phone I'm holding, regardless of whatever, is not compliant, and there should be reasons behind that. And that's why, just like Dr. Hakim mentioned earlier on, to be an advisory committee of experts, just for you to diversify a little bit, you must have passed through a conventional financial institution. Sorry, you must have passed through educational institution, a formal one. You must understand fiqh muamalat, that Islamic commercial jurisprudence. And you must understand and speak Arabic. The reason is because by the time you look at the classical text of Sharia, which is the Quran and the Hadith, it can then help you to come up with your own opinion, your perception, your interpretation of the text. That ability is a function of having strong understanding of the classical basis of Sharia, right? So now, and that's why Sharia scholars can say this bottle of water, even though it's not alcohol or tobacco, is not compliant. It's no longer in the first category. If they pronounce it that way, then that is it. Now, the second category, let's use the same water, right? The person that produces water, right, also produces a bit of alcohol and some cigarettes, but the income gotten from that company is 5% or less of the total income. So the guy makes 100 naira now, but he makes 95 naira from selling water. The remaining 5 naira, he makes it from selling his tobacco, right? Because of that, Sharia scholars have said, hey, let's allow you to invest in it. Let it go, no problem. Let it go. On the one hand, on the other hand, assuming this same guy doing water has interest-bearing loan from conventional banks, up to 30 or 33%, depending on what the Sharias accept or the Sharia scholars want, right? Let's use average of 30, which is the most common one, right? He has conventional loan in, conventional banks of up to 30% of his market cap or total assets, and it's not compliant, right? Even though he's selling water, right? On the other note, this same company selling water has 30%, is expecting money from investment in bonds, in T-bills, in interest-bearing, investments, up to 30%. of its total assets or capital or market cap is also not compliant. Now, scholars can also come up with other financial screening, depending, Now, on the back of this, then you take them out, even though it's water, right? So sometimes you can argue that, hey, scholars is 35%, but if I don't invest, there will be nowhere to invest. You can go back to the scholars and say, hey, scholars, there's a problem here. Even though, we want 30% benchmark, but our investment just increased to 35% or 31%, kindly allow us to invest in it. Scholars they are at liberty to allow such investments to go on, right? So basically, scholars in 117 Capital or scholars in Marble Capital can say, I will accept 30%. Marble Capital will say, I will accept 30%. 117 Capital can say, hey, 31%. Trust Author can say, hey, we're fine with 35%, right? If the scholars agree, the opinion of the other scholars regarding other issues cannot be mixed. In fact, there's a particular case where we got approval from our scholars for a particular issuance. We then told them that we're going to use our external Sharia scholars to give opinion. And they vex so much. Like, no, why should you take our opinion to another set of scholars, right? So when a firm, a company, or the scholars there agree that this is the ratio we're going to use, either following our office standard or changing the rules slightly for whatever good reason, on the back of that, is compliant, right? Now, the third option, again, like I mentioned earlier on, people may argue that the company doing this water, right, the management are fighting for whatever reason, or somebody just is a one-man business, I don't know, there's cayman risk, he had a bad accident or something. For that singular reason, investors can as well, so the scholars can say, hey, it is no longer compliant, even though that's kicked, you've ticked the first option, it's water, it's fine. You've kicked the second one, the financial screens are fine. You then say because of whatever socioeconomic factor or public interest, issues around public interest, it's no longer compliant, then it won't be compliant anymore. Let me just keep it simple. I hope it's simple enough.
Thank you. Thank you very much, Dr. Shudi. If I'm getting you right, there are three screens. There's the ethical screen, there's the financial screen, and there's the social screen. The social screen means the impact of that business in terms of how it impacts our social welfare. Thank you very much for that. There's something that I have heard severally during this session, which is the Sharia Advisory Committee of Experts, the Sharia ACE. And this question goes to, my next question goes to Mr. Olayinka. Mr. Olayinka, would you say that if an investment opportunity has not been certified by the Advisory Committee of Experts, would you say that that investment is not Sharia compliant? And would you advise investors not to invest in it? Meaning that must all Sharia compliant investment opportunities be certified by the ACE?
So two things happen in this regard. In the opening remarks by Dr. Shudi, he made mention of regulation. And regulation is what entails whether a product is Sharia compliant or not, basically. And for every financial institution offering Sharia compliant product, the company itself must have an ACE, or the product being issued should also be regulated or be guided by a particular advisory council of experts. So in technical terms, a product that have not been certified, you cannot say that product is Sharia compliant. So it is when the certification comes that after all review processes have been done. And the essence of the review is to protect the investors. Yeah, because as an investor, you are interested in a product that will align with your faith. And in doing that, it becomes a responsibility on the company issuing that product to also ensure that the product is Sharia compliant, because it's what we call an amana, is a trust on you to be sure that what you are selling to people is actually Sharia compliant. And this is why, in the absence of not the product not being Sharia compliant, at the end of the day, your product or the income you've gathered from those businesses can be rendered Sharia not compliant, and that money must be paid to charity, meaning you will not recognize that income, no matter how huge it is, even if it runs into billions of naira. The aides of that company will declare that profit not Sharia compliant, and at the end of the day, you won't be able to capture it as a revenue or profit at the end of the year. So for a company offering Sharia compliant instruments, the regulation and the major opinion is that the product should be certified by the Advisory Council of Experts, who are going to check that all parties involved in those transactions will have beneficial interest in the asset. So meaning the essence of the Sharia, like Dr. Akim mentioned, is that it should be beneficial. It shouldn't be one-sided. The financial manager should not be the one enjoying while the investors are suffering. So as the financial advisor is enjoying, the investor should also be enjoying, and it is the duty of the ACE to review and ensure that every party is well protected in this regard.
Thank you very much, Mr. Olanke. So
to that point.
Okay, please go ahead. Go ahead.
Yeah,
go ahead.
And
go ahead.
Just to support what Dr. Bashir has said and what my brother Ismail has said as well. So being a member of the ACE, is a very, 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 very important position. Now, it is not just for you to demonstrate that you are a scholar, that you are knowledgeable. Like Bash said, whatever decision you make must be backed up by arguments and supporting documents. It's not just for you to demonstrate that you are an Islamic scholar or an academic scholar and all of that. Or you are not just there because of the sitting allowance you might be paid or economic benefits you might get. You are there primarily for two things. Number one, to guide the development of Islamic investment or Islamic finance for the benefit of all. Number two, it is what we call an amana. It is a trust, and that trust means that between whatever you point out as a fatwa, as an approval, you are expecting that, in the hereafter, because Muslims, we believe in the hereafter, that's why it's faith-based, you are going to meet your creator and justify that decision. So you have something pushing you to do the right thing over and above the pecuniary economic benefits. And that is what you are meant to meet subsequently when you pass on. So that trust, that amana, is enough to guide a number of ACE members to do the right thing. And because they also realize that whatever they say, a lot of people will depend on it. The regulation already says all transactions must be certified before you participate in it. So they know they have a lot of powers. Like Bash said as well, they could say, okay, this transaction that was allowed certified today, tomorrow they can say, no, it's no longer allowed certified. So any decision that they make is extremely important, not only for the economic reasons behind it, but also for the spiritual reason that they know they are likely to face, they are going to face in the year after for whatever decision they make. And to that extent, you actually even see occasionally some ACE members, after a while, they actually recuse themselves, from some of these transactions. But they see themselves like a judge. You are telling people, go ahead and do it. It is fine. So they are responsible for it. And if it happens that they've made wrong decisions or they've not made a decision that is well researched, they know that if anybody does it, they have a share in whatever negative consequences it brings to the society, it brings to those persons spiritually as well, but who are relying on them a lot for their decisions. So Hamana is very important for them, as well as the benefit that the company that they are making the decisions for are also very important. Thank you.
Mr. Moderator, let me say one more thing, please. So there's a CBN guideline for ACE, Advisory Commission of Experts. There's a fourth condition, condition. Yeah. The fourth major condition is that the ACE member cannot be a director in that company, cannot be a shareholder, right? So it's not compromised that because of profitability, he wants to quickly approve a product, right? So I thought it's good that I mentioned that. Cannot be a shareholder of that company. Thanks.
Mr. Moderator.
Yeah, I think Maisha, you're on mute.
Mr. Moderator, are you there? Okay. Perhaps we should just continue by our time is fast spent anyway. Okay, are you back?
I'm back. Apologies for that.
Okay.
Thank you very much, Dr. Shodi. Thank you very much, Dr. Iwali. Thank you very much, Mr. Lainka. Can we have the second poll up? Then we can now proceed to taking the question and answers from the audience. So the second poll is up. What is your preferred way of practicing faith-based investing? You have three options. Option number one, investing in faith-based mutual funds. Option number two, carrying out faith-based investment screens like Dr. Oshodi had mentioned, or you are indifferent. Thank you very much, participants. We would appreciate your participation in the second poll. So we currently have 102 attendees and currently 41, 43, 44 have participated in the poll, Okay. Let's see if we can have 60 participants. Currently at 58. Thank you, 60. So 60 people have participated in this poll, and currently 48% have said that they practice faith-based investing by investing in faith-based mutual funds. 28% have said they are indifferent. We really don't do any of this, but we ensure that we practice faith-based investing, while 23% practice by carrying out faith-based investment screens. For my feedback from the last session, in order for you to ensure that your investments are Sharia compliant, they need to be certified by a Sharia advisory or advisory committee of experts. That's the Sharia is. Please ensure that your investments are certified before you invest. Now, thank you for taking out the poll. We will now move to the questions and answers from the audience. I've been seeing a lot coming, but for the interest of time, I'll ensure that we go through this questions. There was a question I saw from, I hope that question is still here. I saw a question from Romla Shita, which was quite interesting, but I can't see that question again. I hope it hasn't been answered. But the question, I'll take this to Dr. Iwali. Apologies. I'm sorry that I'm apologizing. It seems that I've put you on the spot, even though you're my elder brother. So the question was from Romla Shita, and it was pertaining to what propositions would you advise in order to push the growth of faith-based investing in Nigeria? I think she was very concerned that the acceptance of faith-based in Nigeria. What propositions would you advise?
Okay, thank you very much.
What should we be doing?
Yeah, thanks so much for that. I mean, thanks as well, Romla, for that question. Yeah, so there are a few things we're doing, and there's so many more things we need to do. The first is awareness creation. I mean, this is just financial awareness creation. I mean, PR publications in the newspaper, social media, and the like. We need to ensure that we enhance the quality and the intensity, of awareness of Islamic finance across the whole country. Thankfully, we've seen the Sukuk issuance of FGN doing that for us. But as players, we need to come together and ensure that we create that awareness. People need to know that it is possible for you to get a faith-based investment, on your phone through any of the asset management firms. We could even have arrangement where you could have them through any of the banks, and I know that the NIFIAN, which is a non-interest finance association in Nigeria, actually working towards that. So in a couple of weeks, you start hearing so much awareness, on different fora, advocating, Islamic finance, Islamic asset management, and faith-based investments across the country. So we're going to do that, and the second thing we're going to do is also to ensure that a lot more people are able to have easy access to these investments. We mentioned the fact that, people just think it's only Sukuk that you have, it's only FGN Sukuk. But as we've seen at this session, we have so many instruments that are available. We'd like to make those instruments to be a lot more available to people so that people can be aware that these are opportunities that they can actually have access to as quickly as possible. And also, you're on this call today, so you have a role to play as well. Let your friends know, let's use word of mouth to also let people know that Islamic finance or faith-based investment, they are available, they are regulated, and then people get not only the returns, they also get the peace of mind that the investment they are making aligns with their convictions, which is why they are going the route of a faith-based investment in the first instance. But surely there's so many things that we could do. And while I'm on that question, there's also a question by Romla as well, since it's a question of Romla Shita that we are answering. She also mentioned whether there are opportunities for internship, for students who seek to expand their knowledge and practice of Islamic finance. The answer is a yes. So I'm sure if you engage one of these firms that you've mentioned, you'll have an opportunity if you meet some of the criteria that they may have. Thanks.
Thank you very much, Dr. Iwali. My next question is to Dr. Oshodi, and this is from Lawal Bello. Why are other forms of investment not being advertised the way Sukuks, FGN Sukuks are being advertised? And for me, I think that also relates to what you mentioned severally, to say, beyond the public space, there are a lot of private Sukuks. Why are they not being advertised? Why don't we hear about them the way we hear about FGN Sukuks?
Okay, thanks. You know that we are also regulated by SEC, Securities and Exchange Commission. There are certain products that are not public products. They're private. So if I have a note, a small note to raise 5 billion, yes, I'll do that transaction, or 3 billion, whatever, or even 20 billion. It can be private, right? Maybe I'm going to raise money in tranches, or I'll have them in series and all of that. So you don't make things around it. You just call a few potential investors, put the money together, you do the transaction, you're done. Right? In case of federal government Sukuk, is a public issuance. Now, what SEC prefers going forward, they prefer more public issuances, whereby they will approve it, and then you can make loads of noise around it, and it can be everywhere. But yeah, so basically that's the answer to that question. In the same vein, just like Dr. Iwali mentioned, we need to have more, if you like, awareness going on. I know we had one last week on fintech, Lotus Capital. There was one 2 weeks ago, there was one yesterday, there's one next week again, with SEC and IFSB. Now, all of these, we need to increase them basically, so people can be aware that really all the insurances do not really have to be public. They can actually be private, but more importantly, let people even be aware that this product exists. Because a few days ago, somebody told me that, oh, you did not even know there's anything like non-interest banking in Nigeria. So this thing, yeah. So I agree with you. We should have a lot more. We should address some of these concerns more. But again, I must also mention the budget for publicity, because of the size of the market and the players, because of their size, the investment in publicity is also low at this time. So you can't put all that money to sponsor events and to do loads of stuff. Of course, that will heavily reduce profitability. Yeah.
So thank you very much, Dr. Oshodi. I think I would also pass, or rather, I would also pass this question to you from Taiwo Ogunla, which is in line with what you just mentioned. Do we have any Islamic fintech in Nigeria?
There are loads of them. There are loads of them. Even yesterday, I still met a few young guys. I mean, a lot of young guys are doing fantastic stuff right now. And they're so fantastic that even this morning I had meeting one or two. And so you see, I'll call them fintechs. I also call some prop tech, you know, those doing stuff in, you know, if you like Sharia compliant real estate, tech, should I say apps, as the case may be. So yeah, you have loads of them. And that was a session we had last week where we invited quite a number of them. And we're trying to see how we can collaborate better, right? But what I think this gentleman needs to do is to speak with us, and then let's see how we can work together going forward. Yeah. Because again, I mean, it's annoying at this point. Also, out of that question, it's annoying that at this point, you want to buy Sukuk, you're still filling out forms. Yeah, you understand federal government Sukuk. If I want to do a private Sukuk of just 10 billion naira, why do you have to be filling forms and doing all of those things when I can just get everything done digitally within a few seconds? Even for our notes and our CPs and everything, that's the destination. All the KYC, everything should be done very quickly online, front end and back end, right? And so we need to collaborate more with the fintechs and the protects. Thanks.
Thank you very much, sir. Mr. Olayinka, I have a question for you. This question is from Kunle Aluko. And it goes, I'm not comfortable with faith-based concepts. How is the Sharia Advisory Committee of experts composed? Are there any audits? Meaning, who audits them? Who ensures that they carry out that function? I remember a response from Dr. Shodi regarding directors cannot be Sharia experts, cannot be part of the committee and all that. Who does the audits? So, Mr. Olayinka, this question is for you from Kunle Aluko. How is the Sharia Advisory Committee of experts composed, and are there any audits?
Okay, in the composition of the ACE members, number one, you have to look at the level of education, which is their on the subject matter of Sharia and finance in this regard. So you are not just taking a Sharia expert, rather you're also having a Sharia expert who have financial knowledge. And among the composition, again, is that you also look at people with different diverse understanding, meaning you need a Sharia advisor who is good in real estate for him to understand terminologies that are related to real estate. The same thing with agriculture. So they are not just ordinary people in terms of the normal education. They also have the Sharia education and the conventional part. We've made mention of Amana, which is trust. For someone who is knowledgeable to some extent, his major job is based on trust. And you understand that it is an ibadah, meaning people entrusted their money and their decision on you. If you are taking the right decision, you will benefit from it. And if you take the wrong decision, the sin is not on the investors, it's coming on you. And for someone who is conscious, you will be conscious of your hereafter in any decision you take. And but basically, when you look at some of the actions of some of the ACE members, you agree that they've been very professional as they can. A lot of financial institutions' income have been declared non-Sharia compliant, and they've been ordered to pay those money to charity organization. If they are not being sincere, such kind of declaration will not occur. And for at the end of the year, the way you publish your audited account, the decision of the ACE members are also supposed to be published so that the investors or any regulatory body will have access to some of this information. Meaning they will be able to scrutinize some of the decisions they'll be able to make within that particular financial year. And the one thing we should also agree is that we have different school of thought. I may agree that a particular product, like Dr. Oshodi mentioned in terms of the Sharia screening, whereby somebody may say 33%, the other school of thought may say 30%. So you may have diverse opinion on some issues, and it doesn't mean because you have diverse opinion, then it is not Sharia compliant. In Islam, we have 4 schools of thought, and some of these schools of thought have different interpretation to issues. We have some that will say a work can be perpetual. Some will say, no, it can be timely. So it is decision that we have to look at. But in the real sense, the major underlying principle of any ACE member is trust. And they understand, because of the level of knowledge they have, that people have entrusted their action on you. You must do justice to it. And at the end of the day, you're supposed to publish some of the resolution you'll be able to make within that particular year. And it is from this resolution, people can see the wisdom and behind some of the decisions you've made. If there are corrections, you can come back and correct it. I think these are basic explanation on whether the ACE can be subjected to further scrutiny or not.
Thank you very much.
We'll just add as well that, I mean, for ACE members, you know, for example, if it's the ACE of banks, of Islamic banks, they are also approved by the Central Bank of Nigeria. You know, so they have to, apart from the bank suggesting names of the ACE members, the qualifications, the CV, you know, the CBN has a prerogative to actually decline or approve such ACE members. The SEC as well, whenever you're applying for transactions, maybe a fund, you know, they need to check the ACE members. They also at times decide to disapprove a particular ACE member, you know, for reasons, maybe conflict of interest. They think they're not so competent. So there's that level of accreditation, you know, certification that is done by regulators as well before they approve a person to be a member of an ACE of a particular institution. And the rules that were shared by SEC as well, you know, also give some basic qualifications, you know, that you must possess, you know, before you can be deemed to be competent to be appointed as an ACE member. Thank you.
Dr. Oshodi, you have something to mention?
Okay, I just want to add that for audited financials of companies, you know, ACE are also expected to give their statement. You know, anywhere the company goes against any of their rules, they're supposed to state it. Anywhere there's non-permissible income, they're supposed to state it in the statement. Just like you have the accountant giving their statement and all of that, and even the legal team. So I thought it's good I mentioned that too, you know. Yeah.
Okay. Thank you very much, Professor. Thank you very much. I have two questions, and I'm going to call it a day. I have to answer this. I have to push out these two questions because for me they are quite interesting. And from there, I know we are past our time. My sponsors have already started. They've started knocking on my door to say, you know, you need to wrap up. So I'll take this question. This first question is actually directed to Dr. Bashir. As rightly, and this is from Adamu Sambo. How, as rightly pointed by Dr. Bashir, that one may invest in a company that trade in Sharia compliant product or service, but is also involved in interest-based borrowing from conventional financial institutions. Since the essence of investing in faith-based companies is to earn clean income, how can the investor clean off the interest element in the income he or she earns from such investment?
Yeah, set aside some money as non-permissible income that we given to charity. It cannot be added to the banks or the financial institutions' income. It will be given you know, as charity, as simple as that, really. Yeah. So again, in the beginning, Sharia scholars were very stiff 30 years ago, 40 years ago. That must invest, everything must be fully 100% compliant. There were no investment globally and locally. There were no investment, even for real estate that seems to be compliant, right? They had to put a non-permissible, you know, aspect to be 20% of the portfolio. It's okay if 20% of your portfolio is not compliant, yes, it's still fine. Or like where I talked about, you know, where you do products that are not, where your income is 5% of non-compliant, you know, product. When in the case of real estate, it's 20%. They start with 5%. 5%, they couldn't get compliant products. You know, yes. To answer your question, after investing in all of these, you know, or accepting these companies that have some of these deficiencies, if you like, you then give her a certain portion that must be approved by the ACE to registered charities. And even for the charities, usually we get the ACE to give a fatwa, a ruling on the kind of charities that you put money in. So I'll give an example. from experience, the places where I've worked now, where I am right now, we need to do educational institutions, health care related matters, and orphanages, for example, rather than to religious associations or bodies. Thanks.
Thank you very much, Dr. Bashir. My last question goes to Dr. Iwali, and it's from Akinjide Akinshino. In terms of returns, can you say that Sharia compliant instruments have done as good as conventional instruments? Can you please mention few Sharia compliant instruments with good returns? Dr. Iwale, to help you for interest of time, can we just have only two Sharia compliance instruments that have good returns?
Okay, thank you very much. So the answer to the question in terms of returns, can you say Sharia compliant instruments have done as good as conventional instruments? The answer is yes. So in Sharia compliance or Sharia compliance investments, you are not trading off your returns, for Sharia compliance. So you should get that clear. So you can still make your money and still be compliant with Sharia standards. Examples, I mean, the federal government, bond for Sukuk, for example, gives you comparative returns to the federal government bonds that have been issued in the recent time. We had a recent issuance of the ABCP, asset-backed commercial paper Sharia compliant one for FX that gave yields, returns, profit rates that are close to 18%, 18.5% as well, which is literally comparable to what you get in some of the comparative risk level based conventional instruments. Yeah, and you also have even the FX FETCs, which is the exchange traded commodities, that gave returns as high as 48%, this season alone. So those are good returns, and you're also investing in Sharia compliant instruments. Thank you.
Thank you very much, Dr. Iwale. I didn't want you to say that last one, but you said it. I didn't want you to say it. You said it, but that's a fantastic one. Based on just to put a bit of emphasis on that, based on its annual average annual return for the past 4 years is actually, that instrument has done between 40 to 48% on an annual basis. So thank you very much to our panelists. Thank you very much to our audience and attendees. I would apologize to the attendees that have not been able to respond to their questions. What I would say is you could kindly reach out to us, send us an email, which would be shared, and you can send us, and we'll also look at your questions and see how we can respond to them and also share that with you via email. On behalf of myself and the panelists, on behalf of myself and STL, I thank the panelists for being members of this session, and I also appreciate the attendees. We had an average of 110 attendees at this session. It's quite a significant improvement from our last webinar. I would also appreciate our attendees to look out for our future webinars that will be coming up next year, because we've come to the end of the year in 2024. And I'd say a big thank you on behalf of myself and STL. Thank you, and do have a fantastic day. Thank you very much.
Thank you, everybody.
Thank you very much, Mr. Akiyobili, Dr. Akiyobili. Thank you very much, Dr. Oshodi. Thank you very much, Mr.
Bano, my brother Akim.
Yes.
Thanks, everyone.